Hey guys, and welcome to the Working Money channel. I just got tagged in this morning. Phoenix G. Xanthos posted this. Now, I did a video just yesterday, and if you guys didn't catch yesterday's video, in part of that video, I talked about the connection to Vanguard, and I showed this slide from what looked like a presentation demonstrating the same to a crowd, and we could see within that presentation slide, we could see all the companies that were going to be connected through RippleNet. Here's a copy of that slide, but it looks like Phoenix Xanthos here on Twitter actually took the time to label all these connections. And so he tagged me in this tweet, and I thought that I would just bring this up so you guys can see how deep it goes. I did recognize a few of the logos, however, I missed out on a few of them, like BlackRock, a big important one there, Berkshire Hathaway, Alphabet, BNY Mellon, Google Ventures, that's another big one here, JP Morgan Chase. So there were a few here that I missed, but I will link this in the description if you guys are interested. And if you guys didn't catch yesterday's video, I will link it up here in the top right-hand corner. So we've got Bitcoin trading at 57,200. Looks like it is holding that level of support quite nicely. We haven't seen too much movement to the downside after we did see this uptrend, a new all-time high for Bitcoin on November 10th. So not too much movement for Bitcoin, therefore not too much to write home about with regards to Bitcoin. It's still hugging the point 786 here on the Fibonacci. And if I bring up XRP real quick, we can see XRP still doing more of the same, trading at about $1.05 as of the time of this recording. However, it was posted on Twitter that we should be looking at a new formation, something that I have not discussed yet with regards to XRP structure and potential price movement in the hopefully not too distant future. I'm going to get to that, guys, later on in the video. But first, Cathie Wood from ARK Invest, she's pretty critical of the banks, pro-cryptocurrency. Michael at Val5 Links posted this article with regards to an interview she did. ARK Invest CEO Cathie Wood says large institutional entities with strong hands are moving into Bitcoin in a hurry. Notice these words, guys, moving into Bitcoin very, very fast. There is likely a reason for this, which we're going to get to in a second. In a new interview with Barron's, Wood said that institutions have their eye on Bitcoin partially because of its lack of correlation with other assets. Here's a quote: "We can see who's moving in and it looks strong. Institutional holders are moving into Bitcoin. Why are they moving in? Because the correlation of returns among crypto, especially Bitcoin and other assets, stocks, bonds, currencies, commodities, are very low. Studies tell us that there's a correlation of returns among assets. Buying that asset with a low correlation, you will be raising returns and lowering risks over time." So a lot of these institutions are, in her words, moving into Bitcoin in a hurry. So clearly there is going to be, we're not seeing it right now reflected on the charts, but there is going to be even more institutional interest in Bitcoin in the coming, dare I say, weeks or months. Down here, she goes on to say what we didn't expect when we did our own study on Bitcoin. We didn't expect institutions, mainly corporations, to begin diversifying their cash on the balance sheet into Bitcoin. And she is maintaining her price prediction of $500,000 per BTC. The reason we've used $500,000 for Bitcoin, for the Bitcoin price target, is that if institutional investors move into Bitcoin and allocate 5%, so just 5% of their portfolios, by our estimates, Bitcoin will go up to $500,000. Now, that sounds like a lofty Bitcoin price. However, Cathie Wood from ARK Invest, she is just doing the math, and she is using a conservative number of a 5% allocation into Bitcoin from institutional portfolios. And so that doesn't even include all the retail FOMO that is going to happen once we see prices rally. There is also this, guys, on the global stage from BondCrypt XRP, the global stage, China's property market facing collapse. And bubbles always burst. So this from Express.uk, global financial crash fears continue to remain high over an uncertain future of the Chinese company, the Evergrande Group. And if you guys don't remember, I did an Evergrande Group video right when this news story was breaking. Guys, I'll link it up here in the top right-hand corner if you did not catch that. So if the company were to fail to repay its debt, which it looks like it's going to happen, there are fears it could spark the collapse of a huge property market in China. The property market, as mentioned down here in this article, I believe is worth about 29% of the country's GDP. So while it is unlikely the company itself will be bailed out by the Chinese Communist Party, if the property market in China does collapse, it could spark major problems for the economy in the state, an expert has claimed. This is coming from Steve Tsang, director of the School of Oriental and African Studies. China Institute said the individual companies don't matter very much. So Evergrande is just one of the bigger ones, but there are other companies here that do contribute to the Chinese GDP via real estate developments. They are unlikely to be bailed out, he says. The property market matters, and if it triggers the collapse of the market, that is a very big deal. The CCP is banking on that it won't do so. The property market is essential for China, and as I said before, it makes up $55 trillion. So there's also the Evergrande story, guys, that I wanted to bring to your attention. But going back, kind of shifting back to cryptocurrencies in the US, Bitcoin particularly, Cynthia Lummis, Republican senator for Wyoming, recently fired back at Hillary Clinton. This coming from Michael at Val5Links here on Twitter. She's firing back at Clinton for deriding cryptocurrencies. She suggested that Bitcoin offers a hard money solution to the US dollar's inflation problems. Lummis's comments followed the cautionary words of former Secretary Hillary Clinton earlier this week in a panel discussion at a Bloomberg New Economy Forum in Singapore. Now, if you guys didn't catch that video I did discussing Hillary Clinton's comments, I will link that up here. The latter suggested that cryptocurrencies could destabilize nations. Today, Lummis responded to Clinton with the opposite perspective in a tweet. She said that Bitcoin could help stabilize an otherwise unstable US dollar. Here's a quote: "Great leaders do not fear the future. America could win the future by embracing Bitcoin as hard money that can be used to stabilize the USD and undo the tailspin that begun in 1971. So we know this banking system has been in trouble for a while now. It's being propped up by printed money. And so how much longer can it last?" This article goes on giving us some history about abolishing the gold standard. President Nixon did this in 1971. So Cynthia Lummis obviously standing up, staying strong on her opinion about cryptocurrencies, Bitcoin in particular, some accusing her of being a Bitcoin maximalist. Nevertheless, it's good to have somebody there in Senate as a proponent for the cryptocurrency market as a whole. It's unclear what Lummis has in mind when she calls Bitcoin stabilizing the USD. She may mean that Bitcoin could back US dollar value. So that's an interesting proposition, right? If the US dollar is actually backed by Bitcoin, that is an asset that will not depreciate. That is a deflationary asset, like how gold did pre-1971. Alternatively, she might simply mean that Bitcoin will force the US dollar to compete as a store of value by reducing inflation. So some interesting ideas there coming from Cynthia Lummis. Also wanted to thank Michael for posting that. Got another one here, guys, from XRP Crypto Wolf. Crypto hyper growth can beat inflation. And so you and I know this. We're invested in cryptocurrencies for a reason. Those reasons may have morphed over time. I know for myself, I got into cryptocurrencies thinking they were just like stocks on steroids. And then over the years, I've realized, no, this is something even bigger. You know, when I was hearing people 2-3 years ago saying, well, I'm never going to cash out of my cryptocurrency, I thought to myself, well, why the heck not? I mean, you can make money. Why would you want to ride it in and out of bull runs, bear markets, bull runs, bear markets? That doesn't make sense. As the years have gone on, though, now that we're through a pandemic, now that we're seeing hyperinflation, now that we're seeing economies being devastated, it is becoming more apparent why one would want to keep part of their cryptocurrency and maybe not sell it all. Now, I've been a proponent of that idea for the last year or so, and that is when I created this. This is my Excel crypto exit spreadsheet to give you guys a taste of if you wanted to cash out of, just a portion of your cryptocurrency position, maybe 50%, 55%, 70%, just depending on what you decide to do. This is an Excel spreadsheet that you guys can have on your computer. Carrie from App Labs has also created a mobile app version, so I will link this in the description as well. This is the cash out plan, working money channel cash out plan. You can get this from the Apple Store. I believe there's one that's almost ready for Android as well. I know he's been working on it. I don't know if it is up yet or not. But anyway, this plan gives you guys an idea of where you would be financially if you cashed out a portion of your cryptocurrency. And you guys can see here on the left-hand side, this can be manually input. You put in what coin you want, the symbol, how much you have, and your target price cash out. So just to give you guys a resource there. I can understand now why you wouldn't want to cash out of all your cryptocurrency position, considering where this market's going, considering we could indeed even see a prolonged bull market. But back to this article, guys, with regards to hyper growth. And so what this analyst is suggesting is that if you invest in cryptocurrencies, this would in fact hedge and even beat inflation and deliver returns. So this coming from Anastasia Amoroso, the 60-40% portfolio is not just going to be enough to beat inflation and deliver returns, she said. The thing you might want to do is peel a little bit from the 60% and allocate it to something like cryptocurrencies, because if the portfolio has a chance of beating inflation, you have to have hyper growth in the portfolio. And that is exactly what cryptocurrencies do. If you take, for example, that low point in March 2020 on the XRP chart, even one of the not even the best performing cryptocurrency, and you take it to where we are today, XRP has rallied over 800%. You compare that to the S&P 500 from that same point here, March 2020, and take it to where we're trading today. You can see on this chart, it looks, even just quickly, it looks like it would have performed better, but you bring it up here and you can see that the S&P has only rallied 114%. So not even taking the best performing cryptocurrency, you can see that the cryptocurrency market has done a lot better because it rallies so hard and by a lot. So Amoroso noted that cryptocurrencies have risen this year by something like 200%. I think that is wildly underestimating the entire crypto market, and said that Bitcoin has classic inflation hedging characteristics, including its limited supply alongside growing demand. So she is realizing, look, if you want to hedge against hyperinflation and, if you want to be able to preserve your wealth, in the past, we would look to, in some cases, safe havens. You could always cash back out into fiat currencies, but now fiat currencies are at risk of being debased. And so what is the hedge? Well, of course, cryptocurrencies. So that's just another article here from this analyst, iCapital's analyst, Anastasia Amoroso. Thought that was interesting, so I wanted to thank XRP Crypto Wolf for bringing that to our attention. And the top blockchain university, this is some Ripple news, guys, from Michael at Val5Links. So here's the story. The University of California, Berkeley stands out by directly integrating its research with the crypto industry to break new ground and provide the education needed for growth in the sector. Ripple, the payments company behind the crypto token XRP, they fund research at Berkeley into the application of blockchain technology through the Berkeley Haas Blockchain Initiative. The project offers research grants for faculty and students and organizes events and activities designed to help students learn more about the topic. So we have heard about Ripple and their UBI, the University Blockchain Initiative project, but this one specifically focusing on Berkeley. Their courses funded by Ripple include Building with Blockchain for Web 3.0, along with some other courses. There is a course for MBA students too on blockchain for enterprise. Ripple funded research over the last few years has investigated questions ranging from what keeps stablecoins stable to what drives demand for cryptocurrencies. So it sounds as though Ripple is, really kind of funding these educational initiatives to help not just the XRPL, not just XRP, but the entire cryptocurrency industry as a whole. And this is one of the reasons why Ripple, a great company, if I could invest in Ripple, I would be investing in Ripple, the company, as well. Once they go public, I'm definitely buying Ripple stock. But also the entire cryptocurrency market, of course, we know they have a vested interest in XRP. So ultimately, whatever they're going to fund is ultimately going to benefit XRP. And I think it's because XRP is going to be so widespread globally. There's going to be a lot of demand surrounding XRP in the coming years. And, expanding the cryptocurrency ecosystem as a whole is really just part and parcel to what is going to eventually expand XRP utility as well. So more great news here, this specifically from the University of California, Berkeley. So wanted to thank Michael for posting that. And an XRP Fractal update, guys. This from JC Hodler here on Twitter. The 4-hour chart showing the November 2020 Fractal will repeat any day now. Here is what JC Hodler has noticed. Take a look at this pattern, guys, and take a look at what we are seeing today. So very similar structure, very similar psychological buying and selling patterns. We are seeing a lot here on the charts that would suggest the next move up would definitely be up past all-time high. Now, I wanted to bring up the same XRP chart that we're seeing from JC Hodler. Now, this is on the daily. We could see that there was this significant level of resistance before that plummet. Now, he was talking about November of 2020, of course, before the SEC lawsuit occurred. And even though this was an anomaly, even though this was a black swan event, and as XRP holders, we understand this now. It's funny because the same kind of structural pattern has existed here, okay? So the accumulation phase after that push up, some basing, then that double bottom pattern, okay? Basing, double bottom right over here. Another rally to the upside matching up with this. Rally to the upside matching up with this. Coming back down again, forming another small double bottom there, down again. Double bottom, not quite getting down to there. And then in early 2021, we saw a slow move up for XRP over here. And here, guys, we're seeing this slow move up. It's kind of vacillating a little further down, but ultimately we are seeing this still move to the upside. Okay, and if I were to throw a Fibonacci on here, guys, where would we get? Throw Fibonacci on the first fractal pattern from back in November. That would bring us up to the 2.618, okay, right up here. That is where we finally topped out. So if I were to take that same theory here, guys, and take a take a Fibonacci and bring it up here, that would bring us, give or take, right in and around this zone here, okay? So that would be a price point of roughly $4.32. So ultimately above all-time high. And so just zooming out here on the XRP chart as well, you can see even just taking this bars pattern from here, bringing it over, and here on this one, the structure is extended a little bit, so even if we moved it out, doesn't really matter for this particular exercise. What we would see is a top roughly of that same price, so $4.59, give or take. That would definitely bring us above all-time high for XRP. I do still think that we could see some resistance in and around all-time high, so $3.35 on some exchanges, and even here on the fractal pattern, if you zoom in kind of close here, I don't know if you guys can see that, but there is some resistance building up, or rather it is theorized that there could be some resistance building up and around here. And so it's interesting to see it from this perspective, guys. You know, all signs pointing for an XRP rally. It is no secret that this is the direction we are not only going to see XRP go, but the rest of the crypto market. Wanted to finally bring you guys this from XRP Crypto Wolf. And here's what's really telling as well. This coming from Shark Tank investor Kevin O'Leary. He says he plans to get far more exposure to the crypto market before a massive fundamental development takes place. Listen to what he has to say. He says many people don't know yet how to get exposure to the crypto markets. I know there's a lot of excitement out there, but much of what is going on in crypto and happening right now is at the individual level or the hedge fund level. What he is saying, guys, and pay attention, it is not happening yet at the institutional or pension or sovereign fund levels. Those customers that I know through my work in indexing have told me there's a great interest in allocating to crypto, but no compliance infrastructure has allowed them to do so yet. They have compliance committees, they have compliance departments, they have regulators that oversee them. The way to look at this is that it's so nascent, it's so early that if you believe there's a future of decentralized finance and cryptocurrencies, which I do, you have to make a binary decision. Either you believe in it or you don't. I'm not telling people what to do, but I see no reason in my own personal position not to get some exposure while this grinds through the global compliance regulator in every geography. So Kevin O'Leary also realizing that it is going to be a compliance play. Once we get that regulatory clarity, and I don't know how many times I have said this, once we get that regulatory clarity through the SEC Ripple lawsuit and others, we are not only going to see XRP price rise to $4.59, guys, we are going to see mass adoption, which is going to make our $10 to $15 price targets look like child's play at the end of the day. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.